Welcome to Sabio Trade Room. In this video, we'll dive into leverage, margin, trading schedules, and swaps. Every trading instrument comes with its own set of characteristics that determine the optimal trading styles and times. For example, if you're trading euro-dollar, you've likely noticed terms like margin required, available, leverage, initial margin, and maintenance margin. These terms are all related to margin trading and are calculated based on the maximum leverage available for a specific asset. For the euro-dollar, the maximum leverage is 1 to 30, meaning you can open a position up to 30 times larger than your capital. However, the broker reserves a portion of your funds as margin collateral, which cannot be used to open additional trades. The margin required to open a trade is called the initial margin, which in this case is 3.33% of the investment amount. This figure is derived by dividing 100% of the investment by the leverage of 30. For instance, if your investment is 100 euros, the margin collateral would be 3.33 euros, or when multiplied by the current euro-dollar quote of 1.048, approximately $3.49. Once the trade is opened, this amount is deducted from your available trading balance. So, if your initial available balance was $20,016, after opening this trade, it would drop to $20,012. The more trades you open, the higher your total margin collateral becomes, reducing the funds available for new trades. To keep a trade open, you also need a maintenance margin, which is 50% of the initial margin. In our platform, you don't need to constantly monitor your margin level because your risk is capped at 6%. This ensures you won't reach a point where your free funds drop too low relative to your margin collateral, so scenarios like a margin call or stop out won't apply to you. When you carry a position overnight, a swap is applied, typically a negative value. The swap size depends on the specific trading instrument and the direction of your trade, long or short. We'll cover swaps in more detail in Video 9, where we'll explore the desktop version of the trading platform. As for trading hours, forex pairs like euro-dollar trade 24 hours a day, 5 days a week. This is possible because trading occurs on the interbank market rather than being tied to a specific exchange. There are 4 main trading sessions: Sydney, Tokyo, London, and New York. Some sessions overlap, enabling continuous round-the-clock trading. The highest trading activity occurs during the overlap of the European and American sessions when spreads are typically tighter and average volatility is higher. In the mobile version of our trading platform, you can view the schedule for the current and upcoming sessions. A full trading schedule is available in the desktop version, which we'll review in Video 9. Next, let's look at cryptocurrencies. For most coins, the leverage is 1 to 3, 10 times lower than forex pairs, due to their significantly higher volatility. As a result, the initial margin and maintenance margin are 10 times higher. Cryptocurrencies trade 24/7. For certain highly volatile or high-risk assets, like Trump coin, the leverage is 1 to 1. This means that to buy a coin priced at $17.65, you'd need the full amount in your account. For stock indices, available on our platform as contracts for difference, CFDs, the leverage is 1 to 20. This corresponds to an initial margin of 5% and a maintenance margin of 2.5%. Note that trading schedules vary. These assets are available 5 days a week, with a short overnight break. For individual stocks, the leverage is also 1 to 20, but trading hours are limited to the operating hours of the exchange where the stock is listed. The same applies to ETFs. For gold, the leverage is 1 to 25, and trading occurs 5 days a week, with a break following the close of the American session. For oil, the leverage is also 1 to 25, with trading available 5 days a week and a break during overnight hours. So, we've covered how leverage works, and now you're ready to learn about technical analysis tools and indicators. See you in the next video.